At this exact second, Strive Inc., ticker symbol ASST on the NASDAQ, is trading live at 1.07 USD. The stock is currently down 0.036 points, or roughly 3.26% for the session, continuing a painful bleed that has defined the last few weeks of trading. The chart right now looks heavy, with the price action aggressively testing the lower bounds of its recent support zones. We are seeing a classic falling knife scenario where every intraday bounce is being met with immediate selling pressure, trapping retail traders who keep trying to time the bottom. If you are watching the level 2 data, the bid stack at 1.07 is incredibly thin, and if that psychological floor gives way, we could see a flush down toward the sub-dollar territory faster than most investors realize. The narrative surrounding Strive Inc. has been one of the most fascinating psychological case studies in the market this year. The expectation was massive. When the company announced its pivot, moving away from its legacy operations as asset entities to become a full-blown Bitcoin treasury company, the retail crowd immediately began pricing this as the next MicroStrategy. The thesis was simple, seductive, and seemingly foolproof. Take a small-cap NASDAQ listing, use it to raise capital, and aggressively accumulate Bitcoin on the balance sheet. Investors piled in, expecting a correlation play, where every tick up in Bitcoin would result in a multiplier effect on ASST stock. The expectation was a parabolic run to double digits, fueled by the anti-woke branding and the aggressive capital deployment strategies championed by the new leadership. But here is the reality, and it is a harsh one. The market is not rewarding the Bitcoin proxy thesis right now. It is punishing the execution risk. The stock trading at 1.07 tells us that institutional capital is skeptical of the dilution required to maintain this strategy. While the retail expectation was infinite leverage on Bitcoin, the reality has been infinite supply of paper. The issuance of the Series A perpetual preferred stock, ticker SATA, and the constant need for fresh capital to fund Bitcoin purchases have created a massive overhead supply that is choking any attempt at a rally. The market is effectively saying that it does not trust the premium that ASST is trying to command over its net asset value, NAV. You are not just buying a Bitcoin holding company, you are buying a company that is actively diluting its common equity to service its treasury ambitions. And right now, the math is hurting the common shareholder. Let's look deeper at the price action we are seeing today. The drop to 1.07 is not just random noise, it is a structural failure of the recent consolidation range. For the last 2 weeks, bulls have been defending the 1.10 mark, treating it as a line in the sand. Today, that line was crossed. When a penny stock loses a key support level like 1.10 on rising volume, and we are seeing volume ticks coming in hotter than the morning average, it signals that the smart money is exiting or shorting into the weakness. The chart shows a massive gap down from the 52-week high of 13.42. Think about the capital destruction involved there. To go from over $13 to 1.07 represents a complete collapse in sentiment. The investors who bought the hype of the merger and the Semler Scientific acquisition are now sitting on losses exceeding 90%. And that creates a zombie shareholder base, people who are waiting for even a small spike to sell and get out, which creates a permanent ceiling on the stock price. This brings us to the core business model, which has undergone a radical transformation. Originally, this ticker belonged to Asset Entities, Inc., a company focused on digital marketing, Discord community management, and the creator economy. They built servers, managed influencers, and tried to monetize Gen Z attention spans. That business is still technically there, but it is no longer the driver. The new Strive Inc. is a financial engineering vehicle. The core business is now capital allocation. They are using the public markets to raise cash through equity, debt, or preferred stock, and dumping that cash directly into Bitcoin. As of the last disclosure, they held over 7,500 Bitcoin. In theory, this makes ASST a leveraged bet on crypto. If Bitcoin goes to $200,000, Strive Inc. should theoretically explode in value because their balance sheet assets would dwarf their market cap. However, the disconnect we are seeing today, with Bitcoin holding relatively firm while ASST drops 3%, suggests that the market is worried about the cost of that Bitcoin. If you were issuing stock at these low levels to buy Bitcoin, you were diluting shareholders at the bottom. It's a dangerous game. If Bitcoin trades sideways, the company still has to service its obligations and manage its burn rate, which can lead to a death spiral for the stock price. The Discord side of the business, while interesting, generates nowhere near enough cash flow to support the valuation. The entire company is a derivative bet on the future price of Bitcoin and the management's ability to raise money without destroying the stock price. Right now, the price of 1.07 suggests the market thinks the destroying the stock price part is winning. I want to pause here and ask you a question, because this is where the rubber meets the road for retail traders. Comment below how many shares of Strive Inc. ASST you currently hold and what your average entry price is. Are you holding from the pre-merger days, or did you buy the Bitcoin Treasury news? I want to see where the pain points are in this community, because knowing your average cost basis helps us understand where the selling pressure might finally dry up. Now, we need to address the elephant in the room: short selling. You cannot analyze a stock trading at 1.07 with this kind of volatility without looking at the short data. There is significant short interest in ASST, and for a very specific reason. Short sellers are not just betting that the company will fail. They are arbitrage trading. Professional funds often short the common stock, ASST, while going long the convertible preferreds or the Bitcoin itself, capturing the spread. When a company issues complex securities like the SATA preferred shares, it often opens up these arbitrage windows. Hedge funds will pound the common stock down to lock in a risk-free profit against the other instruments in the capital structure. Furthermore, when a stock hovers near the $1 mark, it attracts shark shorts. These are traders who know that NASDAQ requires a minimum bid price of $1 to remain listed. If ASST stays below $1 for 30 consecutive business days, they get a deficiency notice. That notice triggers fear, which leads to more selling, which leads to a potential reverse split. Short sellers love reverse splits. They know that historically, stocks tend to dump hard after a reverse split is announced. So by shorting at 1.07, they are effectively betting that the price will break the buck, trigger compliance fears, and force management into a defensive reverse split, which would provide the shorts with massive liquidity to cover their positions much lower. For you as an investor, you need to watch the borrow rate and the fails to deliver data. If you see the cost to borrow on ASST spiking above 50% or 100%, it means shares are becoming hard to locate. This could trigger a short squeeze, but only if there is a massive catalyst, like a sudden 20% candle in Bitcoin or a surprise earnings beat. Without that catalyst, a high borrow fee just indicates that the smart money is willing to pay a premium to bet against this stock. Do not mistake high short interest for a guaranteed squeeze. Often, it's just a sign that the company is in a toxic financing cycle. If you are long, you need to be checking the daily short volume. If over 60% of the daily volume is short selling, the price is being artificially suppressed. But fighting that trend is like swimming upstream in a waterfall. Let's shift to the retail sentiment, because that is the only thing keeping the stock alive right now. If you go on X, formerly Twitter, or check the Reddit threads on r/penny stocks or r/short squeeze, the sentiment is a mix of cult-like devotion and extreme despair. You have the Diamond Hands crowd who believe that Vivek Ramaswamy's association and the Bitcoin thesis make this a guaranteed winner in the long run. They're posting rocket emojis and talking about the anti-woke movement fueling the stock. Then you have the realists who are looking at the chart and seeing a distribution pattern. The debate online is fierce. Some users are calling for a class action regarding the dilution, while others are encouraging averaging down at these levels. This polarization is typical of battleground stocks. When sentiment is this divided, volatility is guaranteed. You rarely see a slow, steady climb in a stock like ASST. It will either rip 50% in a day or bleed 5% every day for a month. We also have to consider the macro environment. We are in late 2025, and the economic landscape is punishing for microcaps. Interest rates, while stabilized, are not at zero. That means the cost of capital is high. For a company like Strive, which relies on raising money to buy assets, high interest rates are a headwind. It makes their debt more expensive and makes investors less willing to speculate on unprofitable companies. The risk-off trade is dominant right now. Money is flowing into mega-cap tech and safe havens, leaving liquidity deserts in the small-cap Russell 2000 space. ASST is suffering from this lack of liquidity. You can see it in the intraday charts. Gaps between candles, slippage on market orders. This is a low liquidity environment which makes the stock susceptible to manipulation by market makers who can walk the price down with very little volume. Looking closely at the 15-minute chart, we see a bear flag forming right now. The stock dropped at the open, consolidated sideways, and is now threatening to break lower again. If 1.07 breaks, the next technical support is not until the psychological 1.00 level, and then the